Hello, 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 hello. Alrighty, how's everybody's Tuesday? Welcome to Income Trading Tuesday, episode 1. We're going to walk through trading for income, mainly stock options. So let's just get right into it. So the first question I usually get is, what is a stock option? And it's essentially a contract with an expiration date that allows somebody to do something with the underlying stock at a certain point, anytime between the time that it's open and the time it expires or the position is closed. So if you have a stock in mind, just pick one here. Let's go with Go. Go here to an actual chart. How about that? All right, go to GoPro. And let's say, so let's say that I want to actually buy GoPro, but I don't necessarily want to pay current price $10.80. What I can do is I can sell an option on it at a lower price, collect a little bit of money, and if any time between the time that I sell that and the expiration, if it gets below that, the person that bought it can assign it to me at the agreed upon price. And if it never gets to that point, then I just get to keep the money and find another option to trade later. So 1089, I actually don't like this chart, but a free charting program, well, not really a program, but a free charting site is tradingview.com, and you'll get a nice little stock chart here. Look up pretty much any symbol you want. It has a bunch of options. I'm not going to cover them all tonight. Tonight's just kind of an introductory type deal. We're going to set up our chart. We're going to set up our free trading account so you can trade right along with me with risking no money, but we can use the actual stock market prices. And we're just going to see where we go from here, if we actually make any money or not. But hey, we'll give it a shot. Why not? So you can see from the chart here that GoPro over the course of the last year, oh good grief, has gone from a high of about 1750 down to a low about 719. And over the last couple of, that's Monday, that's today, so since Thursday of last week, it has gone from just below $9 all the way up to about 1135. And today it kind of pulled back a little bit, but you can see here on last Thursday where it opened up a lot higher than its previous close. 5 days. This is where it closed at last Wednesday. Thursday morning it opened, got up, settled into a nice little range. Friday went up. Yesterday went up a lot. And might actually be pulling back a little bit. So if I wanted to go ahead and buy GoPro, saying I think the stock price is going to go up, it's going to continue to go up, whatever. I want to invest in GoPro. Let's just put it that way. But I'm not sure that I'm really happy about this $10.89 price here. See where it kind of tried to get above it before, didn't do it, fell all the way back down. Let's say that I'm just a little skeptical. So what do I think would be a fair price? $10? And $50? Maybe I'm kind of on the fence about it. So there is an option. The other website that you can go to is the Chicago Board Options Exchange. This is where we're going to set up our paper account, our virtual trade account. And you just go in, create an account, go to education. Once you've got your account logged in, go to virtual trading tools, takes you to the page that I'm currently on. Go to virtual trade, here to start using virtual trade. So you can see right now my account has $2,500 in it. The reason you normally start off with like 25,000 in your paper account, I knocked this all the way down to 2,500, mainly because the average tax return in the United States is about $3,000. So if I took a little below that for the average tax return, and if this was my tax return, then I could actually start earning money off of that, potentially, as opposed to just going out and spending it on a new TV or whatever. So I just wanted to challenge myself and see how much I could increase this over the course of, say, a year, 6 months. I don't know. We'll see. I'm planning on doing this at least every Tuesday. We'll go through, we'll look at some stuff, maybe set up a trade, and we'll just see where we go. But you can go right along with me. Again, this is a paper account. There's no money to set this up. There's no money at risk. You can leave the 25,000 in there if you just want to play around in your little sandbox or whatever. Entirely up to you. But that's what I'm going to start with. So on with GoPro, 1089. But I don't necessarily want to buy it at that. Maybe I want to raise a little bit of money for it before I buy it. Kind of hedge my bets a little bit. So what I'm going to do is I'm going to go to trade, go to options, and let's see what the options chain is. GoPro. So the September 1050 calls. Last bid price, 50 cents. The bid ask is 42.40. So we got a little bit of spread there. When it comes to an option, you have two sides. You have what's called a put. You have the call side. The put side you usually do when you expect the price to go down. The call side usually when you expect the price to go up. Now this is if you're buying options. So if I expect the price of GoPro to go down and I own the stock, then I'd sell a put. Or I'd buy a put. If I own GoPro stock and I was expecting to go down and I wanted to hedge my bets, then I'd go ahead and pay somebody a little bit of money up front to give myself the right to put the stock to them at the agreed upon price. So what we got here is we got our symbol. We have our expiration days. Typically, options expire the third Friday of every month. And just so you know, the 15th is the third Friday of this month. So September's options would be expiring in 3 days. So what we're going to look at is not August. We're going to look at October. You can see the third Friday is October 20th. So when we go here, 20th? I just totally messed that up. October. Yeah, that's the 20th. Okay, this must be the year. All right, that's fine. So if I want to give somebody I want to buy the stock, but I don't want to pay the current market price for it. I want to collect a little bit of money up front, kind of help bring down my purchase price. And if it doesn't get below the price that I set, then I get to keep the money they pay me up front. So let's say October, so we can go 10. 10's fine. We'll go 10. Then we're going to go to the type, so we're going to put, because we're basically kind of figuring that the price is going to stay up above 10. So we keep the money, but we don't necessarily have to buy the stock. If it does go below that, we've got a little bit of money up front. So our purchase price actually gets, we don't actually wind up paying the full $10 for this. Now underneath action, we're going to, sorry about that. Headphone just decided it wanted to turn off. Okay, quantity. So how many shares can we buy at $10, $2,500? Well, every contract, every options contract influences 100 shares of the underlying equity. In this case, if I put a 1 here, that's one contract, which influences 100 shares of GoPro. So 100 times 10 is 1,000. We can do 2. We can't do 2.5. We can do 2 contracts, which is 200 shares of the underlying equity, which in this case is GoPro. So looking here, GoPro October 17th, $10 put. The last bid was 28 cents a share, or the last mark, I guess, current market price, 28 cents a share. The bid is 29, the ask is 35. There's a 6-cent difference here, so maybe we can try to get somewhere in the middle. 3 cents, 29, so that's 32. So let's put a limit, 32 cents. Now, what this price is price per share. And each contract is 100 shares. So we're looking at 32 cents times 100, $32 times 2 contracts, which is $64, minus our commissions and all that good stuff. Commissions usually aren't that much. In this case, you'd probably be looking at, say, $7. So we minus the 7 out of there, you'd be looking at $57 that you would get paid up front for this option. And it goes into your account as soon as the order is filled. You would collect this money up front. We're not going to worry about that. So this is what we got. We got GoPro, October 17th, $10 put, sell to open, 2 contracts, which influences 200 shares of GoPro. Yeah. And we put a limit in here of 32 cents. So we want to get paid 32 cents a share for taking the risk of selling this put, which doesn't sound like all that great because we're talking maybe 57 cents or $57, right? But if you're doing a few more contracts, things look a little better. But even then, $57 is probably $57 you didn't have. And we're priced. Why not? So what this means is once I give you the order, okay, estimated order total, this commission is a bit high. I know in my brokerage account, my commission is right about, say, $7. $4.95 plus 75 cents per contract, so that's 5 plus $50, so about $6.50. But that's okay. We're going to go with this. And go ahead. Good. Limited 32 cents. A day order. And basically what the day order is that it will expire if it's not filled at the end of market close tomorrow. So, good. Track size 100, quantity 2. Okay, so we'll go ahead and place this order. And now we just get to sit back and wait and see what happens tomorrow. If it gets filled, which there's no guarantee that it will, but if it gets filled, then they will pay us 32 cents per share, blah, 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 blah. In this case, according to this, it'd be about $49. Not bad. We'd have to wait a little while for it. Right about, let's see, 1, 3, 4, 5 weeks. Just to see if we get assigned or not, but that's all right. Fine with
that. Host connection detected. Routing hollow feed now.
Well, thanks, Noctis. Wasn't expecting to be hosted for this. This was supposed to be a quick thing. So yeah, that's pretty much it. again, if for some reason by October 20th, if the price of GoPro goes below $10, then the person that buys this from us, that paid us our $57 up front, or $50 according to this, up front, has the right to put the stock to us at $10, to make us buy it at $10. So if it's at $7.50, they can make us buy it at the agreed price of $10. Sounds a little scary, but as you'll see as we go through this trade and next week as we look at it and see where we're at, we are not completely on the hook here. We do have some moves that can be made if the stock price starts to go down. Or if we want to buy it at $10, we have moves to make once we actually buy it. It just kind of depends on where it's at. Right now it's at 10.89, so it's got to move almost an entire 10% to get back here. Could be done. But okay, so TradingView apparently wants you to create an account, blah, 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 blah. Whatever. Anyway, so we'll go in here. I actually like this chart a lot. And this is through my actual brokerage account. This is a paper account that I get through Ameritrade and their platform, Thinkorswim. I'm not saying you have to use it. Every brokerage has their own paper account thing like this. I've just liked this one. I haven't really looked at the other ones. But so anyway, what we're going to do, we're going to look, bring some of this up, at our $10 option for that we just sold in the other account. We're going to kind of look at the numbers here. Right here, can't see it that well. This is the probability of our option expiring out of the money. Out of the money means that it's not below the $10 because we're on the put side. So it's a 66% chance that our option will expire completely worthless. Meaning that on the 20th of October, stock price of GoPro will still be above $10, even if it's $10.01, it's still above the $10. And our option expires worthless. Meaning we get to keep the money and our option is completely off the hook. So we get to keep that $50 free and clear. It's not sexy money. This won't necessarily make you rich. This is just introducing you to the world of options, and we're in our paper accounts. So we're just going to see where it goes and have a little bit of fun with it, maybe. A thought. But we can also go through managing the actual trade, so we can own a stock, get paid to own the stock, and get paid while we own the stock. So that even if the stock price continues down, we don't lose any money. The idea is basically to get our return, our original investment back, much sooner than if we just bought it and held on to it and waited for the stock to go up and decided to sell it whenever. So we can possibly earn a little bit of income off this, depending on how much money you have in there. In your paper account or whatever, you get an idea of kind of how much passive income you could make. So that's the brief introduction. Email me at prohtius@gmail.com if you have questions. This video is also going to be up on YouTube. Leave me a comment on YouTube. I'll address your questions in the next episode next week. And we'll open up another trade, and we'll just go from there. Thanks for watching. See you next Tuesday.